Understanding the U.S. economy in 2025. Inflation, jobs, trade, explained. Stuck in an economic haze? You're far from alone. This week's avalanche of data on inflation, jobs, and trade policy offered some clarity, but not enough. Let's break it down with brutal honesty. America's economy is strong foundations with visible cracks. Here's the big picture. No sugarcoating included. The bottom line, 6 key takeaways. 1. America's growth remains sturdy, but wobbly. 2. Consumers keep spending, but caution is creeping in. 3. Recent tariffs didn't hit peak projections, but they're quietly hiking costs. 4. Trade deals might expand U.S. market access, but everyday Americans now pay more taxes on imports. 5. The job market, once the economy's safety net, is now its weak link. 6. Interest rate cuts could arrive sooner than expected, but this is where it gets controversial. Many still believe tariffs are America's only path to Trade War 2.0 victory. Others argue it's short-term pain for long-term gain. Let's dig deeper. Trump's trade crusade was supposed to shake the economy like an earthquake. Surprise! That seismic shift hasn't materialized yet. Instead, the absence of immediate recession disaster gave investors confidence to buy stocks hand over fist, driving markets to all-time highs. It also emboldened Trump to hit imports with tariffs that now push America's effective tax rate on imported goods to 18%, up from just 1.2% last year. Yale economists warn this could saddle average households with $2,400 in additional costs. Here's where things get murky. Inflation's most watched measure, the PCE index, rose 0.3% in June, pushing annual inflation to 2.6%. That's higher than the Fed's preferred 2% target, and experts warn that trend could spike toward 3%. Behind the numbers, tariffs are forcing businesses to raise prices for everyday goods like washing machines, furniture, and even curtains. But the real bombshell came with July's jobs report. Hiring fell sharply below expectations, with only 85,000 jobs added monthly on average this year, the weakest showing in 15 years outside the pandemic. Jobs gains are now clustered in healthcare and hospitality rather than broad-based growth. Economists like PNC's Gus Fosher warn that while a recession isn't imminent, cracks are appearing. If something else goes wrong, he told CNN, the economy is vulnerable to a downturn. The Federal Reserve kept interest rates high this week, citing strong growth as reason to hold. Critics like Trump, who frequently targets Fed Chair Powell, argue this is worsening America's affordability crisis. But experts counter that Trump's own policies, including trade wars and massive spending plans, are more to blame for sky-high mortgage rates. GDP growth hit 3% in Q2, but behind those numbers hides a confusing reality. Last quarter's panic import stockpiling created artificial weakness, while this quarter's clear-out made things look better. The truth? America's economy is somewhere between steady and fragile. The biggest question, are we marching to steady prosperity, or the path to prosperity, or the bridge to recession? Let's weigh both sides. Arguments for optimism. Consumer spending remains resilient. Inflation shows signs of stabilizing. Job market isn't in freefall yet. Caution flags. Tariff impacts are escalating. Business confidence is eroding. Rate cuts offer temporary relief, not solutions. Gregory Dacko, chief economist at EY Parthenon, sums it up bluntly. We're slowing and will continue to slow through 2025's back half. The question isn't if, but how severe the downturn might be. Last question. Is the economy being managed to protect everyday Americans or corporate interests? Share your thoughts below. Agreement or fierce disagrees, both welcome. Why tariffs spell trouble for a weakening U.S. economy in 2025? Imposing veiled levies on corporations and families through tariffs was detrimental even during prosperous periods. So how can it possibly be justified when the economy is faltering? Brace yourself for some unsettling news. This week, a series of significant economic indicators revealed that the fractures within our economy are expanding in breadth and depth. Two particular findings stood out as particularly alarming. Firstly, a Commerce Department report disclosed that consumer spending declined in the initial half of this year. This occurrence has been rare over the past 18 years, with the sole exception being the period immediately following the pandemic onset. The only other instance we can recall was in early 2010, when the specter of a double-dip recession loomed large, and the recovery from the global financial crisis was anything but certain. This is noteworthy because consumer spending constitutes approximately 2/3 of the entire economy. But here's where it gets controversial. The current administration's response to these economic challenges involves increasing tariffs. They argue that this will protect domestic industries and create jobs. However, critics claim that such measures will ultimately harm consumers by driving up prices. What do you think? Is this the right approach to navigate our economic woes, or is it akin to putting out a fire with gasoline?